Brian Turner here with CCS. Today I got a couple of special guests with me. They're actually from the banking industry, actually ag lending. I've got Dusty Anderson over here, Senior Vice President of First Dakota National Bank. And then I have Austin Havlik here to my immediate left. He is the Vice President of Ag Lending for First Dakota National Bank. And I wanted to bring these guys in today to talk about the lending side. You know, what does it take? You know, what do we got to do? We all talk about lending. Many of the companies, or I'm sorry, the ag guys we're talking with, they'll have operating loans, or they may have been through the loan process before. But what I wanted to really talk about is when we get into ag lending in livestock confinement, let's say, you know, there's all kinds of different programs that are out there. There's and different things you may need. Things are changing every day, right, in the banking industry. Now, you know, as of this recording, the interest rates are dropping lower. I had to bring that up. Everybody wants to know that. So maybe we could put a coupon at the end that, you know, use this for a discounted rate. They're not buying it, guys, just so you know. So I have a couple of questions. So the first question is yes, I have an operating loan. I've got a good relationship with my bank, but I'm also wanting to expand my operations. You know, and whether that is improvement, but let's just talk about I want to put a new building or a new facility, hog facility, let's say, or cattle facility on my property. If I want to do that, what do I need initially just to get together paperwork wise to come to you and say, Austin or Dusty, here's my plan. Do I have to? So in business, you'd have to come back maybe with a business plan. Is that what you're looking for, or kind of take us through that?
Sure. Well, initially, a business plan, like any good operation, would have one already. But you could come to First Dakota with the understanding and appreciation that even if you have a good relationship with your current lender, we're not out there to, all or nothing. You could continue to have your
That's a good idea.
line of credit with your local lender and just want to do the expansion through First Dakota or another lender like us. Some of the smaller hometown banks may get into lending limit issues and need to either participate or do this expansion with another lender. So to start off with First Dakota, we'd require 3 years tax returns and 3-year financial statements on the initial borrower, and we'd start there with the business plan, with what they're wanting to do. Is there guarantors that are involved? Is there contracts with the vendors or the hog providers? All of those kinds of things are good to come in with to visit.
So that's a good point. But that sounds more like if I was an established operator. What if I have my son or my daughter wants to come back? I want to bring them back to the farm, and I want to get them involved. I actually want them to have a little bit of ownership into this. Sure, for sure they're going to be doing the labor, right? We want them to do the labor, but I want them to build that equity, that credit reliability into their whole lifestyle. How do I do that? How do I bring them into the picture then?
Well, there's good opportunities with FSA. There's guarantee programs out there, and in your state Department of Agriculture, there's livestock loan participation. There's building development programs, loan programs, and so there's a lot of opportunities out there to look at different packages. It doesn't all have to be one bank or one institution. Mm-hmm. The best operation will put a package together of different things, and it may involve EQIP, it may involve the 319 program, it may involve FSA, NRCS, First Dakota, and your local lender.
Yeah, and I think it's a great opportunity for some kids to get back to the farm. A lot of times there needs to be some type of off-farm income when someone's returning to the farm, whether it's seed sales, feed sales,
okay,
working in the hog barn, doing something else. A lot of times it just takes something else to help cash flow family living expenses and help them get a jump start with their own operation. So yeah, it's the cash flow working, if you're looking at a hog barn and doing the chores in there, that can help. But yeah, it seems like some of these expansions do help bring that next generation back home.
Sounds like you're talking a little bit about financial planning then. So when financial planning, you want to bring somebody, my son or my daughter, back back to the farm. I want them to get working. I want them to establish, because someday I probably will transfer this ground over to them. But I like where this is going, because then really what you're wanting to do is set down, if you understand, and this is something that's very important, to understand what the end goal is. Where do you as an operator want to take your life? And so that probably is a question. The first thing you ask is kind of like I would say, well, what do you want to be when you grow up, right?
So at First Dakota, we actually have a program specifically for that. It's called Keep Farmers Farming. And it's all about transition and estate plans and business plans. And we live that every day, because we always want to have an end goal. And transition is a big part of the agricultural community. And so confinement barns or these kinds of things are all part of that. And it's important that the entities all have the same goal.
Yeah.
Grandpa, grandma, father, mother, and it's very important to have the wife or the husband, the supporting spouse, because if they come back to rural South Dakota or rural Nebraska and they're from New York City, there's things that have to be considered there, and you have to really plan all of that out and understand and know what you're getting into, frankly.
That's a good point. That cultural change, the cultural shift, right?
Yep.
Is, do I want to be here? So have you, during this, like as you're setting down, you're planning, have you ever had anybody back out? Last minute, you've educated them a little bit, you've taken them through the process, and you said, Brian, I look at it, look at your plan, it doesn't look as solid as you should be, it might not be the best for you. Would you be that clear with me if those are the things that you saw?
It's very important to be that transparent and that clear. If everybody doesn't come in on the same page, it only will lead to heartache,
Right.
or financial stress, or those kinds of things that'll add to a bad situation. So it's so important to be transparent, not only with your lender, but with your family, with your neighbors. That's a big thing too. Neighbors can have a lot of influence and create a lot of pressure for these kinds of situations, and we just come in from First Dakota and try to help answer and provide some logic to the process.
It's funny you bring neighbors up. Neighbors has been a theme. All the conversations we've had today. Do you have a good working relationship with your neighbor? Or do you got Cal, the crabby neighbor guy? And so if I were getting into this, is this something? So when we were talking to nutrient advisors, they would actually help me talk to my neighbor. If I had a neighbor that I didn't really know, or I wanted to do this operation, would you help me talk to them if you felt that this was a good financial plan and it had some solid foundation? If I said, hey Austin, I'm going to go meet my neighbor, can you visit? I just want him to understand that this is a good program and it could help him too.
Sure. Yeah. Okay. There's definitely some positive things as far as some taxes coming off of some of these new facilities that help out the local school districts, things like that. So those are things something that you've got to remain aware of is taking care of that road that goes to a facility and things like that, to be a good neighbor. And being upfront, like Dusty said, with your neighbors about what your plans are and why. I think sometimes maybe that's what's missed is why why are we trying to move to that? It's because we're trying to bring kids home, we're trying to expand the operation, we're trying to get the operation to cash flow. So those things I think people can relate to.
Okay, that's good. So you bring donuts, coffee, and go to the neighbor. Donuts and coffee in the morning, a different kind of beverage in the afternoon would probably get a lot more done. Right?
Yep, depending on the neighbor.
Depending upon there you go. Good point. So we talked a little bit. You mentioned cash flow. So if I'm sitting down, you'll help me, because you'll have to get a better understanding of my current operation, and then let's say whatever expansion I want to do, you'll help me understand the cash flow and can I cover the bills. Obviously we talked teased a little bit about interest rates, so you'll help us understand, or help me understand the interest rate. And as we look at, because these are long-term assets that we're talking about, right?
They really are. You know, there's a lot of different programs and options out there with providers, livestock providers, whether it's, you know, a hog integrator or whoever that is, if it's a hog unit. You know, they've got a lot of different options and a lot of different packages that all kind of work if the right scenario and the right structure is put together. You know, we have people that come and they want to bring a son or daughter back on the operation, and well, we don't have anything down, but we'll give you 2/4 of ground, so you're secure. You're not going to lose a dime on us. That's true, but we really don't want the barn if it doesn't work. It has to cash flow, and it has to be, you know, serviced. That debt has to be serviced with the operation. So pledging ground towards a project like this helps secure it, but it's 100% financing. And those are really skinny. Those are tough to make work. So if you're coming to put one of these operations up, it's really important to somehow, somewhere, get some cash down. If it's 20%, great. Most all of the operations that are successful will do that, because you don't want to go into this thinking it's going to provide an opportunity to come back to the family farm and be broke all the time.
That's a great point.
And so it's got to be able to service the debt, provide a living, and you know, a way of life. And that's really what a lot of these facilities do, is provide a way of life to come back and grow up and be in the community that you want to be in, and raise your kids in those communities.
You know, those are great comments, Dusty, I'll tell you. Well, we're going to get into some more in the next segment, so why don't you, one of you, tell us a little bit more about First Dakota National Bank, and we'll go from there.
Yeah, sure. Well, yeah, First Dakota, based out of Yankton, South Dakota. I think it was 1872 was the first chartered bank in Dakota Territory. We've got now, I think, 18 full-service locations, 4 LPO offices. We've got 3 down here in Nebraska, Columbus, Hastings, and Ogallala, 1 up in Watertown, and then we've got our 18 full-service locations, mostly in southeast South Dakota. Our footprint's a lot bigger than that. We do business, you know, in a pretty big area, and we're not necessarily limited to just where our banks are. I think that we consider ourselves an agricultural bank, and I guess, Dusty, do you have anything to add to that?
I guess the only thing I would add to that, Austin, is you know, our board is local. We're locally owned, privately owned, and all our decisions are based out of Yankton and the surrounding communities there where our board members are from.
Oh, cool.
You don't go to Omaha or Minneapolis or Denver to get an answer. You get them right there with our operation right there at First Dakota.
Oh, that's great.
Yeah.
Well, guys, thanks so much.
Thank you.
Appreciate it.
Yeah, you bet.
Very good.